Hello again, everyone, and welcome to our report. Dion Zakuski, Branch Manager and Director, back with you here again after taking a bit of a summer break. And you know what? We've had a fair amount of action the last couple of months and some more drama as we head into the fall season. In this report, we're going to check into the sizzle of the summer markets, some double trouble for the fall, and of course, what to do from here. All right, so it's been a few months since our last video. What's happening out there? Well, mainly positive news, as central banks around the world have kept interest rates low and government programs are still in place. So global economic recovery has continued, as we can see by the activity index in this graph that we show you here. So it doesn't matter whether you're in Europe or here in Canada, economic activity is increasing, which is obviously a positive, not to the same level that we were back last spring, but at least moving in the right direction. And really what this comes down to is confidence, as the investment markets reflected that too, with an impressive move higher over the past few months. High growth sectors such as technology has gone bananas. Look at shares of Apple, look at shares of Tesla, and the NASDAQ index, which is mainly technology companies, has hit all-time highs a few weeks ago. Then, the beginning of September took a left hook, and worse than some of my tee shots this summer, and we are seeing a market correction right now. But in the big picture, this was somewhat expected at some point. Stocks don't go up forever, folks, and we're getting back to more normal valuations, which in the big picture is actually quite healthy. This brings me to our second topic today, known as double trouble. So heading to the fall, this seasonally can be a tricky time for investors, and we're closely watching two areas that could cause some near-term turbulence. First is the upcoming US election. As we know, whoever is running the world's largest economy is kind of a big deal. Both Donald Trump and Joe Biden have an America First trade platform, so the results will be pretty similar here. Look forward to more trade tensions between US and China, and to a lesser extent, the resource industry friction here with us in Canada. Where it gets interesting is on corporate taxes, though. Trump would be more positive for corporate America by keeping his tax cuts in place, but under Biden, he would look to reverse some of those cuts and also increase rates on capital gains and raise minimum wages right across the board. Our team's thought is that these policies wouldn't happen right away anyway, so I think we have some time to adjust here. Recent polls actually show that Democrat support is fading, and intentions to vote for Trump have been coming up since July, which is an interesting trend because the market too has gone straight up over those past couple months. We're going to show you a piece here. So looking at the S&P 500 index, you can see that the blue line is moving straight up over June, July, and August. Interestingly, Trump's polling numbers also started to move in that direction too. Now, whether the rally is related to polling numbers being a coincidence or not, you know who's going to try and take the credit for it. But the other big development we're watching closely is the potential second wave of COVID. Many believe that with more kids back at school, more people back in the office, that a rise in cases is somewhat inevitable. The big question is, over the coming months, will that be enough to derail things and shut down the economy like we saw last spring? Our strategists believe that this is a concern. However, having seen this movie before, we have to trust that major corporations and governments will be able to react more quickly and avoid another economic stallout. So with all this information, some flashing yellow lights, and a current market correction, what should investors do from here? Well, in the next few months, staying invested but with a degree of caution is the right approach. Even with the volatility we're seeing over the past few weeks, it's hard to imagine that we're headed into a long-term downward or bear market. Most indicators actually show that once we get past the election in the US, and assuming that either a vaccine or effective cure for COVID will be in place, global growth should zoom over the next few years, bringing investment markets along with it. Of course, these assumptions are baked into our optimistic, longer-term view. And as we learned from last spring's sell-off, sticking to a strategic plan that fits your own goals is much more rewarding than worrying about every little bump in the market. Our job remains to focus on quality investments that fit your needs to match your plan or roadmap. And that's all we have for today. Please contact our team anytime for help, and stay safe out there. Thanks for watching.